All right, what is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about GME, GameStop. Everybody wants to talk about GameStop. All right, there was the Santa Con. All right, now there's a giant New Year's Eve party. Okay, and all of this have people hyped up and ready for a rally in GameStop. Now, we broke down in the last video what to look for. Okay, we're going to look at a bigger time frame, such as the weekly chart, and go over the possibility of it coming up to the $35 area. Now, there's a lot to be done for it to come up to there. We'll go over some of the good signals we're seeing on the weekly time frame, but we're going to zoom back into that daily time frame and really go over what it was we saw in the last one and how we got the breakout retest, and we've came up, pushed higher, and it's not a coincidence. We came up right to our resistance level. So we're going to break down all of the key levels, take a look at what's important on the RSI and how you can use the RSI as a leading indicator. Okay, a lot of people use the RSI a little bit wrong. Okay, and maybe not the most efficient way. We'll break down a more efficient way to use the RSI in today's video. Now, as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. And if you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free trade ideas, free valuable finance content. All right, this is what the trade ideas will look like, highlighting the chart conditions and then showing the chart itself. And let's just take a look at the last three newsletters we've sent out, right? We have Teladoc. Okay, Teladoc went up over 14.5% since the time of the newsletter. PayPal, another one, went up over 10% since the time of the newsletter. And Rivian went up over 40% since the time of the newsletter. Those are just the last three. Now, it's all about quality over quantity. So I only put out about 1 to 2 free trade ideas a week. And the reason being is I'm not going to spam you guys' inbox with 5 to 10 different trade ideas every single day just to brag about 1 or 2 hitting them. I look for high quality setups and I spend a lot of time going through many different charts before I send them out to you guys. So if you guys are fans of that, and fans of free valuable content and free trade ideas, you're going to really want to sign up for that newsletter. Now, you can also just join the Investment Intelligence Discord where people are making tons of money, okay? You can join now using the link in the description. It's only $10 a month. And as you can see, PayPal, right, up over 50% on those contracts. Teladoc went up over 100%. But you get access to all of the different trade ideas and all of the different analysis, as well as my custom scripts and indicators, all of my different chart layouts within the Discord. Okay, SoFi was a really great play. Carnival Cruise Lines was another really great play. Lots of many great plays and different trade ideas and lots of analysis in the Discord that you don't get in the newsletter. So you can sign up for both of those using the link in the description. If you don't want to pay $10 a month, that's fine. I've got the free newsletter and you'll really enjoy both of them. Now, let's start off here with our weekly time frame, and we've got a very simple pattern known as a falling wedge. Okay, it's indicated by these two trend lines right here. Now, using a little bit of Elliott wave, you typically see these triangle patterns, all right, with a 5-wave structure. You get an A, B, C, D, E. Okay, now wave E, the important thing about that, does not always have to come down to retest the trend line. Okay, it can come down and retest the trend line, but that's not something that always has to happen. So now that we've gotten our A down, our B up, our C down, we're in the process of the D wave up. Now, where exactly the wave D tops out at is, is to be seen in the future, right? Realistically, we're looking somewhere around 19.54 or 20.65. So if we were to rally up towards those levels, it would be reasonable to expect some type of a pullback. Now, it doesn't have to happen that way. Okay, we can just break out from there and potentially come up to, the last bullish price target right around 35. But again, there's lots of work to be done before that. So, we really just want to try to prepare for different scenarios. And so we know that if we do rally up to there, and this is going to be an Elliott wave, A, B, C, D, E structure here, it would make sense if we start to pull back. And at which point we would look for a wave E, okay? And we really would like to see it, not come all the way down, right? The higher up that it forms and that it goes in this triangle pattern here, in this falling wedge pattern, the more bullish that's going to be, right? So, initially we'd look for a breakout, okay, a little bit of a rejection, and then a pullback, one final pullback before we launch off. Okay. Now, in a perfect world scenario, the falling wedge is going to take you back up to where the pattern began, which again is basically going to be $35. It's at $34.93, right around that area. But keep in mind that there's always going to be potential for false breakouts. Okay. So, if we come up to 23.38, 26.11, or 29.99, keep in mind that, we can come up to those levels and not get the full range of the move. Okay. So you want to be very cautious of those things and very mindful of those things. But when we look at our MACD, it looks very promising. Okay, we're getting a MACD crossover right here on the weekly time frame where the white line is crossing above the red line. That typically is a bullish signal, okay? And a bearish signal would be the white line crossing below the red line. Here's our bearish signal up here, and you can see that the price of the stock fell further. So if we're just now getting a bullish crossover, potentially this means we have lots of upside to go. Now, we're also just above 50 on the RSI. We're at 50.73 on our weekly time frame. Above 50 indicates more strength. So we are seeing some good signs on some of our indicators, such as the MACD and the RSI. When we zoom into the daily time frame, we went over the channel structure that we had. We had the bottom of the channel, we had the top of the channel, right? And we said, hey, if we break out from here, you don't necessarily want to buy the breakout. Now, of course, if you're day trading, yeah, you had a good day trade here. Okay, but ultimately you're looking for the retest, and that's exactly what we got. We broke out, retested the area here, and now we progressed up higher. We pushed up higher, made a high, and now a higher high. And look exactly where we topped out at, our 78.6 Fibonacci retracement level, which is 17.87. So what does that mean? Well, 1787 is going to be that key level, key resistance in our new breakout level. Above 1787, we're going to be fighting our 200-day moving average, which is just below our next price target of 1954. Now, keep in mind what we talked about on the weekly time frame with 1954 and 2065 being potential D-wave targets to the upside before one last pullback and we potentially really take off. Now, that's one scenario that we're looking at. Now, when we look at our indicators here, okay, so let's take a look at our RSI, and there's some trend lines. These trend lines are actually very important for a number of reasons. We'll highlight what they are right now. So take a look how we have a low here, we have a low here, and then we come down and we make a lower low, and we come down and we make a higher low this time. So we have a low, we have a higher low, we have a low, we have a lower low. Okay, very simple terms, very simple concepts. GME was in a downtrend and the RSI was in an uptrend. Now remember, your RSI is your relative strength index. So what this is telling us is that even though the price of GME went lower here, we actually increased in relative strength. This is a term known as bullish divergence, okay? So we had bullish divergence, which is a leading indicator indicating that you could potentially have bullish activity in the future. Okay. And so that really sparked off our rally from a technical standpoint. Okay. Not only from a technical standpoint where we're coming back down towards that bottom of that trend line, but we also had that nice bullish divergence building there. So, from a technical standpoint, we had a couple signals that, hey, GME could be due for a rally. All right. Now, if we take a look, we're making a high, a lower high, and a lower high. So we're making lower highs in a downtrend on the RSI, and we're making a high, higher high, and higher high, making higher highs on the price. So in this case, this is something known as a bearish divergence. Now, don't be scared. Okay. Remember, these are leading indicators indicating what could potentially happen in the future. And if you break those, well, then that leading indicator and that future potential trend is broken as well, right? So let's say we were to come here and we were to break through this bullish divergence trend line, we wouldn't have got this crazy big green dildo right here. That's what we call those candles, big green dildo candles, right? And that's not what happened, right? In fact, we held that trend line and we pushed up higher and got it to play out. And so at this point, if we break through this initial bearish divergence right here, that's going to be a strong sign that potentially we can break through that 1787 resistance level. So pay close attention to this. Now, you do want to be mindful. If we continue to reject this and continue making lower highs on the RSI, it's going to be a sign that, hey, the bearish divergence is continuing and it's increasing in length, and the possibility of a pullback in the future is going to be even higher potentially, right? So, that's really what you want to look for right now is your daily RSI, and you want to see, do we continue rejecting that bearish divergence trend line, or do we potentially break out? Now, if we continue rejecting it and heading lower, okay, 1657, 1565, and 1473, those are going to be your 3 support levels. Okay, below there, most likely we're going to come back down and retest some of the recent lows. So we want to see if we can find support at these levels and break out above 1787 over the next week or two, right? These are going to be some of the key levels to pay attention to and monitor as things progress in GME. Now, that's pretty much it for today's video. If you enjoyed today's content and you'd ever want to book a one-on-one session with me, I do coaching sessions, personal sessions, Zoom sessions all the time. You can head on over to my Ko-Fi page, click on commissions right over here. All right, and you can book a 30-minute or a 1-hour session directly with me. You can also request a YouTube video on the topic of your choice, or click on this button here that says buy a coffee, basically as a way to leave a tip or donation for the free valuable content I put out there for you guys, such as the Investment Intelligence newsletter, where you can get those free trade ideas directly to your inbox once or twice a week. And don't forget, you can also just sign up for the Discord itself to get access to all of the different trade ideas. Joining now using the link in the description, and you'll see all the different chart setups that we had on EXAS, on PLTR, Chewy, PayPal, Teladoc. Toast was a big sleeper play. And I talked about how lots of people would not even be paying attention to Toast. And that play worked out very, very well. Also, okay, all of that, as well as the custom scripts, indicators, my chart layouts, and different things are available inside of the Investment Intelligence Discord. I thank you all for watching, and I'll see you in the next one.